It's funny, talking about Poloniex as like a weird exchange. Like it used to be a really primary exchange. It used to be a big deal in the space. And again, like it's so funny how things go from important to obsolescence. But speaking of exchanges and a bit of interesting news, the world's largest crypto exchange, which is of course Binance, announced yesterday that on September 29th, so less than a month from now, the trading of 3 US dollar pegged stablecoins, including the number 2 stablecoin USDC, will cease and will be converted into BUSD, the exchange's own dollar pegged token, which is currently the third largest by supply. And it's kind of a distant third to USDC with only about 19 billion compared to about 40 billion, I think it's 42 billion that's in USDC. Anyways, it's worth noting that when you withdraw, you will be able to get an equivalent amount of tokens that they're now no longer going to support. So this move, which I don't really think anyone expected, has kind of a lot of ambiguity in it, honestly, at least for now, around why the exchange is doing it and what it could mean for the stablecoin market moving forward. One possible explanation is that the number 3 stablecoin is simply going after the number 2 stablecoin. Binance, as the largest crypto exchange, attracts a whole lot of stablecoins which are held, and they could simply be performing a kind of almost vampire attack in a way that kind of reminds me of how Sushi attacked a different protocol early, in its life cycle as a way to sort of extract value. Basically, the idea here is that when USDC stablecoins and these other stablecoins are cashed in, that dollar is then used to create a new BUSD, which then would make it so that you kind of have this zero-sum game where for every USDC stablecoin that's put into the exchange, they're actually going to remove one from circulation and create a new one for the number 3 stablecoin. On the other hand, this could be tied to regulation. Notably, Tether, the largest stablecoin, will continue to trade. And so it kind of brings up some interesting comparisons, to these regulated US-based stablecoins. And then it also could be consolidating trading pairs, which could be a much more boring explanation because right now, Binance maintains markets for each of these stablecoins against a lot of their pairs. And this would allow them to really consolidate into just BUSD, which would improve liquidity. There are even other possible explanations here, but I think that that's enough to get us started. Will, why don't you take this one first? What do you see when you're looking at this?
Yeah, this is a headline that actually should not have caught anyone off guard, but I think it did catch a lot of people off guard. And it makes sense that they would do something like this, right? Binance has its own stablecoin. There's a lot of stablecoins out there, and stablecoins are in competition with each other. They're all chasing the same yield on the backside when they're investing these stablecoin dollars into the reserves. And they're all also chasing clients and customers to use the stablecoins, whether for DEXs or for trading on a SEX or any or other sort of project out there. And they want to take the largest market. It is a winner takes all market. And what we've seen is that Tether has been slowly dropping while USDC has been rising, and USDC is backed by a conglomerate of Circle and Coinbase. Coinbase is a very large competitor to Binance. And if Binance has the ability to push project that Coinbase has worked on out by using its market position, they're going to do that. It makes sense for them to do it. They're going to be in perfect competition with each other and continue fighting over it. The interesting thing from like the economic side of this or the finance side of this is like how much USDC does Binance have on tap and on reserve to be able to do these sort of swaps? And if they don't have enough, what does that mean for BUSD, right? Like you said, they're honoring redemptions in whatever stablecoin you want. So if you have BSUSD on the platform and you want to swap out to USDC and move off the platform, Binance can do that for you. They might just have to purchase on the market at that time. They might have a reserve. There might be a few other ways of doing it. But the fact that they're including that gives you a little hint about like Binance's position in terms of holding USDC. So you get into this weird spot where you're not only competing with each other, but you're also mutually upholding each other because you have to have reserves of your competitor's stablecoin on the market. These are things where it gets really odd, right? You have all these stablecoins floating around, people are competing with each other. And I think we're going to see exchanges try to build more and more moats for themselves around stablecoins because it means more customers. Jen, I'll throw it over to you to get your take on this story though.
Yeah, I just wanted to latch on to what you were saying on competitiveness. So last week we talked about, NFT marketplaces getting more competitive. There was one marketplace we spoke about last week that was making royalties optional, and that kind of extended into this story for me. I think Binance, especially in the market conditions we're in, needs to find the way to have an edge over other exchanges. I wanted to say famously, but it's not famously, it's not infamously. They undercut Coinbase on their fees. That's noted in the story. And I think, during a bull market, everyone's making money. We don't hear about this competitiveness as much. But during the bear market, I think we're going to see exchanges come up with creative ways to stay ahead. Binance is still the number one exchange. And if they can get another leg up on their competitors in this way, I think we're going to see more of this. Wendy, what do you think?
I think that it is a very, very smart move as a business. Binance, I believe, is currently the top crypto exchange by market cap. They do a lot of volume there. So this makes sense. Why wouldn't they want to be the alpha and be like, you know what, this is what we're going to do on our platform? I think as a trader, it's going to help with liquidity with a lot of the other, trading pairs that they have to kind of get rid of all those other stable coins and consolidate things. So I think it's a very smart idea. I also want to agree with Adam. I think that it does probably have something to do with some of the regulation incoming. We know that there was a story that came out talking about California, that they could potentially ban stablecoins in California if they weren't backed by a bank. And this would take place in 2025. If that does happen, I have to move out of California because I can't work here anymore. So I think it's a combination of liquidity. It's a combination of we want to be the alpha, we want to be the top dog, and it's also with impending regulation. Binance was actually hit very, very hard in the crypto bull run with all of these different countries saying, you didn't register, you didn't do this, we're going to fine you, we're going to do X, Y, and Z. So I think that they're taking precautions now to ensure that they sustain and they remain the top crypto exchange. Will, did you have your hand up?
Yeah, I'll take one last thought on this, is that I think this actually strengthens the stablecoin market. First look, it might be like, no, this is actually bad for the stablecoin market because there's going to be more cutting competition between different coins. But if you think about it, the fact that they're going to do redemptions for USDC and have a reserve on hand and only implementing their own token means that we're probably going to get better volumes and prices on all these stablecoins. There's going to be more pairing because the arbitrage differences are going to be cut across. So I'm interested to see if that does hold up. We've seen some of that happen in the DeFi landscape with the Curve ecosystem, where you have these different pools where you can trade different stable coins against one another. And that's helped keep stable coins around that dollar mark or whatever is your stable backing for your asset itself. I think with exchanges starting to compete with stable coins, we're going to see more of that as opposed to less of that. Throw it up to you, Adam.
Yeah, just one last thought. If you look back in history, there are periods of time before the Civil War where private banks issued their own currency against reserves of gold that they held in a very similar way to what we see today with US dollars and stablecoins. And what was often used the same mechanism was actually often used during that time, where you would have banks that would accept other banks' notes and then go and redeem them in bulk and basically make it easier for people to redeem those notes and then give them notes from your bank instead. So again, this is an interesting sort of repetition of history that we're seeing here. And if it does become something that sort of spreads across the industry, at least to the larger players, then I think it will have interesting repercussions that I'm honestly struggling to really understand where it's going to go. But it's definitely a story that we should be watching very closely. And I think it's going to be an important one.